how Trump's tariffs impact investment, and how to profit. Trump's tariffs are back, and they're hitting your wallet. A 10% tax on Chinese imports is already live, and 25% tariffs on Canada and Mexico could be next. Markets are reacting. How will this impact your portfolio? And more importantly, how can you profit? In the next 5 minutes, we'll break it down and give you 3 actionable investment strategies. Tariffs act like a tax on businesses. When companies like Walmart import goods from China, they now pay extra, and those costs usually get passed to consumers. As of April 1st, 2025, Trump's 10% tariff is costing U.S. businesses billions. Goldman Sachs estimates that if trade tensions escalate, U.S. GDP could shrink by 0.5%, wiping out around $140 billion from the economy. If Canada and Mexico retaliate, U.S. exporters like Ford and Boeing could take a hit. Short-term, expect market volatility. The Dow Jones could see 3 to 5% swings as new policies roll out. Inflation may rise to 2.5% by year-end, putting pressure on both consumers and investors. Now, let's talk money. Here's what tariffs mean for your investments. First, market volatility spikes. When the 10% China tariff kicked in this March, the S&P 500 dropped 4%. More drops could follow if trade tensions escalate. Second, capital shifts. Companies like Apple, heavily dependent on Chinese suppliers, might delay factory expansions or new product launches, slowing growth. Third, winners and losers emerge. U.S. steel manufacturers like Nucor, ticker symbol NUE, could see stock gains of 10 to 15% as foreign steel imports become more expensive. On the other hand, car manufacturers like Tesla and General Motors face rising costs. A 5 to 8% increase in supply chain expenses could squeeze their margins. Inflation could push up to 3%, making long-term bonds less attractive. But with the right stock picks, equities could still outperform. So, how do you position your portfolio? Here are 3 strategies. 1. Invest in domestic winners. U.S.-focused companies like Nucor Steel, ticker symbol NUE, or regional banks like Huntington Bancshares, ticker symbol HBAN, are set to benefit. If you prefer ETFs, the Vanguard Small Cap Value ETF, ticker symbol VBR, gives you diversified exposure. It's already up 7% this year. 2. Hedge against volatility. Gold is a classic safe haven asset. SPDR Gold Shares, ticker symbol GLD, has already climbed 15% since January. If you prefer stocks, consider low volatility ETFs like the iShares MSCI USA Min Volatility ETF, ticker symbol USMV, to reduce risk. 3. Bet on reshoring. Companies expanding U.S. production, like Caterpillar, ticker symbol CAT, could see long-term gains. Infrastructure-focused ETFs like iShares U.S. Infrastructure ETF, ticker symbol IFRA, offer diversified exposure to the trend. Some analysts predict Caterpillar's stock could rise 20% in the next 2 years. Spread your bets. Don't put all your capital into one stock. Diversification is key. Trump's tariffs are shaking up markets, but smart investors see opportunity. Domestic stocks could surge, hedges like gold protect your portfolio, and reshoring plays offer long-term gains. Here's your action plan. Step 1. Consider moving 10% of your portfolio into VBR or GLD this week. Step 2. Keep an eye on trade developments. Policy changes could shift investment trends fast. What's your strategy? Are you playing offense or defense in this market? Drop a comment. I read them all. And if you want more ways to grow your wealth in 2025, hit subscribe. See you next time.